Stand by. This is Business Connections Live, the UK's leading online business channel for SMEs, business owners and entrepreneurs. Streaming live on LinkedIn, YouTube, Facebook and Twitter. The live show is made possible by our sponsor, Restream, the easy way to stream to multiple social platforms at the same time. Restream Studio makes it simple to go live directly from your browser. Get started now at businessconnectionslive.com/Restream. And now, here's Steve Hyland.
Hello there, welcome along. It is Business Connections Live, the program for entrepreneurs, SMEs and business owners. Now, on today's show, we're going to be discussing how to use your business to build long-term, multi-generational wealth. It's a big, big title today, but also is a big, big topic, a great subject as well. It's going to be a real belter of a program today. My guest on today's show is Graham Rowen. He is the chairman of the Beaufort Society. Graham, it's lovely to have you on the program with us today. Thank you very much for sitting in at the very beginning of the program and seeing the mild panic that takes place, because this is the first time we are back in the studio for 6 months. Lovely to have you with us, and thank you.
I'm honoured to be your first guest since lockdown, Steve. It's great to be here.
So we are obeying all the normal social distancing rules here in the studio as well. The crew are all masked up. Probably actually adds something to the way they look, to be quite honest with you. But so if you're still interested, we'll tell you more details about how you too can be on the program a little bit later on. But today we're talking about multi-generational wealth. We're talking about how to get into that. For those people that don't know who you are, tell us a little bit about yourself and what you do.
Okay, sure. Well, just in terms of my backstory, I had a 25-year corporate career. I ended up as a director of a big American company called Texas Instruments. And I was jetting all around the world selling multi-million-dollar billing systems to telecoms companies. This is back in the 1990s. And I was making quite a lot of money, and I, to be honest, didn't really have the time or the inclination to think about investing. So one of my colleagues said, you should get yourself a professional wealth manager. So I looked around, found one, and gave him all my money. And he put it into something called the NASDAQ, which in the late 1990s was on a bit of a tear. And I was waking up $2,000 or $3,000 richer than I went to bed each day, which I quite liked. And every June I'd go there for my annual report and valuation. And all the way up to the year 2000, it looked pretty good. And then in June 2000, I suddenly saw that the chart had kind of gone like that a bit. And I said, well, that doesn't look so good, guys. Should we kind of take some money off the table? And they said, oh, don't be such a wimp. Don't you recognize a minor correction in a raging bull market when you see one? So I said, okay, you're the experts. And I jetted off for another year, came back in June 2001, and the chart had gone like that. They'd lost me £160,000 in 18 months. And then they took me into a little room and said, unfortunately, Mr. Rowen, these losses take your net worth below the level at which we look after clients. So we're going to have to let you go. So I got fired by my own wealth manager. And I thought, okay, apart from how am I going to explain this to my wife? At that point, I thought, well, hey, I can't do any worse than that. You know, I've got to sort of, take ownership here. The problem was, to be honest, I didn't just delegate my money management to these guys. I abdicated it, and I just walked away. And it taught me a very expensive lesson, that nobody out there cares about your financial well-being apart from you. And you've got to take ownership.
Do you think a lot of people do that when it comes to their own personal finances? It's always somebody else's problem. I've got a financial advisor, I've got an investment advisor. They can sort out all the problems, and they seem to feel that they can just step back for a moment and do no more with it.
Well, I think that's true of those who actually have financial advisors or wealth managers, which is still a very small proportion of the population. I think, to be honest, in many ways, it's still a bit of a taboo subject. And the fundamental issue is financial illiteracy. We're not taught this stuff in school or university or in the workplace. So we get into adulthood with no idea about what we should be doing in terms of putting money away, how we should invest, how much money you need to keep to cater for increasingly long lives that we're going to lead. I mean, it's great news we're all going to live to be 100 or whatever, but
we're all going to be poor.
Exactly, yeah. So if you want to avoid that, you need to start young and you need to get some decent information. So my mission, if you like, and then you mentioned that I chair the Beaufort Society. I mean, we help people with information, education, and then ultimately access to investments to help them, really prepare for their future. Because most people we find, even quite successful business owners, have not really thought enough about converting a great business into a portfolio of assets that's going to see them through, and perhaps even their children and their children's children.
It's interesting because, you say that you lost something in the order over £100,000 in this particular investment. How does somebody survive from that? How do you move on from that? Because for a lot of people, that would actually finish them off completely. It'd be bankruptcy around the corner or that kind of thing. From your perspective, what did you do to resolve that? Did you just go, money gone, it was money that was invested, just going to work harder, build up that reserve again?
Yeah, it was a kind of a two-pronged approach, really. One, I still had my career at the time, so I was still earning reasonable money, so I could start to replace that which I'd lost. But the other side was very much going on a learning curve. So I was going to seminars, I was buying books, really educating myself. Absolutely, yeah, because again, although there are certain seminars out there that are just designed to part you from your cash, a lot of them actually you do learn some great stuff. And whether it's about property investing, stock market investing, reading from people who have already achieved what you're trying to achieve, you can short circuit that learning process. So I think don't forget, the biggest revelation was really that even the so-called professionals are not necessarily that good. And you can't just rely on them because they make mistakes or they have strategies that aren't necessarily that great. They don't necessarily change when things change in the market. And I think, for example, at the moment, we're going through a fundamental change that a lot of financial advisors just are not kind of wise to.
So that happens to you, and you decided that you're going to work harder, you're going to raise your funds once again. And then, was it a change of career at that particular point, or did that come later on?
That came slightly later. I think one of the things I realised, which will not be news to most of your viewers, is that it's quite hard to become seriously wealthy as an employee. Unless you're the CEO of some FTSE 100 company. Most of the time, particularly things like the tax system, just takes so much from you. I mean, when I was earning, big money back in the Texas Instrument days,
you were paying big money to the taxman.
I thought I was single-handedly supporting the NHS. I never got any letters of thanks, by the way, but I was certainly running a few hospitals. But yeah, so I really learned that you have to be in business if you want to generate significant wealth. But even that's only half the story, because then the question is, what do you do with it? And the big mistake I still see today in most of the business owners I talk to is that they think all their wealth is tied up and should be tied up in the business itself. And if there's one thing that 2020 has taught us, it's that there are curveballs out there waiting to take your business out, no matter how good you are. Who could have thought what this pandemic would do? If you're in the hospitality sector or the travel sector, the event sector, it's been unbelievably difficult this year. So you've got to think to yourself, the business is only there to generate money that I can take out and put into some investments so that I'm not 100% relying on my business for my long-term wealth.
If you want to give a question or you have a question for Graham, then please don't hesitate. You can do that on the social media platform that you're watching this particular programme on. Tim Coe, he's come through. He said, "Hi, Steve and Graham. Good to see you both side by side. It's lovely, actually, to be doing a programme like this. After 6 months, we haven't been in the studio. Studio has been used. Some corporate clients have come in. As I said, we've been obeying social distancing as we've been going through. There's been some building work. In fact, I think there's some building work going on today, but they've been doing all sorts of things on the roof of the building as well while we've been gone. Linda Bazant, who is a transition consultant but also the co-owner of Business Connections Live, straight away she's got a question for you. What does Graham think of the eToro platform? Are you familiar with this?
Yes, it's being heavily promoted at the moment. I think Again, one of the things that happened in recent times with technology, and eToro is one, of course, Robinhood is perhaps one of the famous ones in America.
I don't know. I don't even know what it is.
Well, it's a very easy platform for investing in things like stocks and shares. So, for example, in the Robinhood application in America, they all got sent these checks by the government in lockdown. Loads of people have been going onto Robinhood and buying shares on the stock market, but sometimes they're buying companies that are in Chapter 11 bankruptcy. Their decision making has been highly questionable, but all these retail investors have piled in on these platforms like eToro and Robinhood. So just because it's easy to invest doesn't mean that you should be kind of pressing the button without doing a bit of analysis first.
Let's get on with a little bit more about you. The most common wealth mistakes business owners make. What do you find yourself saying to business owners when you go in now and you talk to them? Because you're helping them to generate wealth now. So what is the most common thing that you find yourself saying?
Well, what they say is, look, if I reinvest all this money in the business, in my next marketing campaign, in my next product or service, I can make a far higher return on investment than any of these things you're showing me. And I say, yeah, that's absolutely true. There's no way on earth I could compete with the 50, 100, 200% returns you get on your Google AdWords or your Facebook advertising. But that's not the point. Those are what I heard one entrepreneur refer to as the fast pounds that you make in your business. You need to think about taking some of those fast pounds and converting them into slow pounds in your investment portfolio. So the thing I always try and emphasize is you've got to treat your business like a giant ATM hole in the wall. And its whole purpose is so that you can take money out of it regularly and put it into some other assets that will be there long term, regardless of what happens to the business. So my biggest argument with business owners is getting them to agree that they take money out the operational business and put it into other kinds of assets that will give them longer term, albeit lower returns.
It's very interesting you say that. James Wendell Brown, he's on LinkedIn at the moment, and he says 2000 to 2008, I was 100% in property, lost it all. And it does, you just get hit by these curveballs all the time. And it just shows you that you've got to be prepared for this. We cannot be just in a single niche, can we?
Well, no, that's right. And yet, obviously, property took a huge hit in 2008. But then, if you look at the current scenario, we've got the stock markets and the bond markets now at, 40-year highs. Yes, it's possible they could go up further from here. But if you were to take a reasonable, balanced view of it, really, would you be putting new money into some of these stocks like the FANG stocks, the Teslas, the Facebooks and so on at these price levels? So, yeah, you've got to recognize that there are cycles in markets. There are also curveballs like the global financial crisis in 2008. But the more diversified you are, the more legs you have on your investment table, the more safe you're going to be to survive some of those things. So, obviously I hear horror stories of people who put all their money into property, all their money into cryptocurrencies. Anything where you put all your money into one thing, including your business, puts you at risk.
A lot of people put all their money into the property, though, don't they? And as James has just highlighted there, that too is a big risk too.
I think it's less of a risk. You very rarely see property going to zero, for example. What happened in 2008 was a lot of people were leveraged up to their eyeballs, and so they immediately went into negative equity, and therefore their only option was to kind of give it back to the bank as a repossession or something. What you'll often see, and I think the Sunday Times Rich List is a great source of information on this, is that people will make their money in business and then they'll start building a property portfolio, whether it's residential, whether it's commercial. So there's definitely something to be said for property as a long-term safe haven. But if you're treating it more like a speculation, if you're heavily leveraged or you're flipping properties or not, that sort of thing, then you are obviously at that frothier end of the property market where you would be vulnerable to some kind of correction. So it really depends how you're playing it, and people talk about property as if it's one market. There are hundreds of property markets. At the moment, country homes away from the city are doing remarkably well. Retail property on the high street, not quite so good.
Final bit for this particular section, very briefly, Robinhood no longer coming to the UK. Is that correct? Asked Linda Bazant.
That is correct. Yes, they've decided not to come into this market. I think there are many ways you can invest in the stock market. Robinhood makes it free, which is obviously attractive, and then they just put advertising on the platform, whereas a typical broker in this country, you're probably going to pay somewhere between £5 and £10 for a trade. So it makes it free. But again, it's not a question of how cheap or how easy it is to invest that matters. It's what you're investing in and why. And people need to put a bit of work into this and think about, would I really want to buy that company at that price at this moment in time? And unfortunately, these kind of platforms can make it almost too easy to implement a bad decision.
More from Graham in just a few moments' time. Graham Rowen, he's the chairman of the Beaufort Society. We've got more from him in a few moments. If you do have a question, please don't hesitate. If you're on any of the social media platforms, just go on there, ask a question, and we will ask Graham for you. You're watching Business Connections Live. Great to have your company as always on a Monday. It's a funny old day today. Here we are back in the studio again. It's rather nice, actually, to be honest with you. And, let's go back just a couple of weeks to a previous programme. Had John Hammond on the programme. We were talking about personal reputation. Reputation when you go out there and you're talking to your customers, when you're presenting those training courses, or maybe you're on a Zoom call. How do you make absolutely certain that you protect your reputation? With the key takeaways from that programme, here's John Hammond.
My name is John Hammond, and basically I love nothing more than helping people to enhance, preserve, and really maintain their reputation, to make their reputation great. The reputation, I think it was Jeff Bezos from Amazon said, is what people say about you when you leave the room. What's your reputation saying about you, and how can you make it better? Whether that's online, the first impression you make, whether that's you speak too quickly, you need to slow down, or whether it's you give me too much information. You're not thinking of me as an audience. All those things I think are vital to think about and perhaps change. I work with people all over the world, most of them in leadership positions, and I help them to connect to audiences, because connecting to people, especially in our current situation with the pandemic, is more important than ever. We can't see them face to face, we can see them online. And my encouragement would be to increase your reputation, make it the value-driven reputation that you really want people to see. By doing that, people will trust you. And again, there's a great shortage of trust, whether it be in politics or whatever world, if you look at the news every night. But be the leader that people want to trust, because you communicate with them well, you communicate with them effectively, and you enjoy doing it, because that comes across too.
Fantastic program. If you want to watch the entire show, just go to our website at businessconnectionslive.com. If you'd like to be on the show, if you'd like to find out how you go about doing that, that's said easy to do as well. All you got to do is drop us an email to this email address. It is studio@businessconnectionslive.com, or you can pick the phone up. Better still, in this world of COVID-19, give us a ring on 01784 256 777. You can follow our stream of consciousness at BCL Business TV. Don't forget, you can watch the program on Facebook, you can watch it on LinkedIn, you can go to all the social media platforms and watch Business Connections Live. But the best place to go, with over 400 hours of great business advice, is businessconnectionslive.com. Go to the website, check it out there, and you'll get a whole load of advice and information for free on that website. And you can rewatch all the programs at your own leisure. So there you go. So do that, won't you? You're watching Business Connections Live. It's a Monday afternoon. We're live. My name's Steve Highland, and my guest on today's program is Graham Rowen. He's the chairman of the Beaufort Society. Graham, as we said, lovely to have you with us on the program today. One of the questions that a lot of people must ask you, and I'm sure it's something that I would ask you if we were having a consultancy, or you were consulting me, how and what do I actually know what to invest in? How do I get into the process? Is there a process that I should be working my way through? I take it it's going to reduce risk. I take it it's not going to be completely fail-safe. But how do we start? Where do we start?
Yeah, no, absolutely. And I mean, one thing clearly to understand up front is that every different investment, every kind of asset has its own risk profile, including keeping cash in the bank where it's losing value. You know, even since 2000, money in the bank has lost 35% of its value. You know, so it's quite high risk. I meet a lot of people who keep an awful lot of cash in the bank, and that's, you know, one strategy. People think it's safe, but you know, you can be losing money there. But
well, you look at NS&I, they've just reduced their rates, and they're about to reduce them again. Yeah. So, I mean, we're in a crazy situation. It's nearly better to keep in a mattress, isn't it?
Yeah, absolutely. and you know, yes, exactly. You've got a negative real return, so zero is better than that. You might as well have it under the mattress. So that's why I've got a few bruises on my forehead. But one of the things that people say is, you know, how can I structure my investment? So I came up with a concept I call the wealth pyramid, because the reality is different assets do a different job for you at different layers in that pyramid. So perhaps if we could bring up the first slide, which is the
base level. So it's the next slide, if we could, Gordon. So they're very good. There we go. The bedrock layer. Tell us about that.
Okay, what you're trying to do here is just what we've been talking about. This is to protect the purchasing power of your cash. So this is where I would put things like gold as an investment, for example. It's got a 5,000-year track record of keeping up with inflation. I would probably put Bitcoin there for a similar reason. Although it's much newer than gold, it's starting to show similar characteristics of being scarce and being a hedge against the weakening of paper currencies.
It's interesting to see that PayPal are now taking Bitcoin, aren't they?
Yeah, it's coming into wider use. I think it's definitely something that's an asset for the long term. But I'd also put other kind of real assets in this base layer, this bedrock layer. I'd include probably your main home in that, because it's something that, again, is a sort of a hedge against inflation and goes up as the currencies decline. I'd probably put in things like art, fine art in there, maybe, you know, classic cars, things that will retain their value because of scarcity over a long period of time. Now, these are great, but of course, none of those things puts money in your pocket. So that's what I call the maintaining the purchasing power of your money. And it's very interesting. If you look, I did a video recently on the fact that if you value your main home in ounces of gold, you get a bit of a shock, because as of today, it's worth exactly what it was in 1987. Whereas you might be sitting there thinking, oh, I paid £30,000 for this and it's worth £500,000 today, therefore I'm rich. Only because, you know, the pound has lost so much value, it takes a lot more of them to buy the same amount of bricks and mortar. Whereas something like gold, where you have a constant, you can actually look at the gold price across the last 20 or 30 years, and it puts the value of your property in a rather different context. So it's worth just realizing that, you know, one of the things that we all have to live with is the declining value of the pound or the dollar or the euro as we go across time.
So would it be better then to be investing in gold itself? Is that one of the suggestions that you make, you know, that's really where the money should be going?
Well, I think again I come back to the fact that we have to kind of allocate our assets across the whole pyramid. So I'm not saying put all your money in gold. I'm saying that some percentage, you know, various experts say 5%, maybe 10%, depending on how negative your view of the fiat currencies like the pound is, you want something in gold. But if we go up to the second layer, this is what I call the passive income layer of the pyramid. Because nothing in the bedrock's going to put money in your pocket, the passive income layer is where you put the kind of assets that will put money in your pocket. So the classic here, the very popular one with Brits, has been buy-to-let property. Now, in the last few years, buy-to-let landlords had a really tough time. Mm-hmm. It started back in the days of George Osborne and his Section 24 tax changes. And recently, of course, with COVID, we've had a scenario where rents have been hard to collect, but the government has said you're not allowed to evict people for not paying the rent. So landlords have had a really tough time, but historically, that's been a great income generator. Commercial property, if you own, you know, the offices that you operate from, things like that, the right kind of commercial property, like warehouses.
I mean, I would say the commercial property owners at the moment must be looking through the round hole, mustn't they? Because, you know, a lot of their tenants have been working from home. People won't need the same amount of space. So a year ago, 2 years ago, that would have looked like a fantastic investment. Today, it's not looking quite so sure, is it? So this is all crystal ball gazing, isn't it?
It is, and it's part of why you need to be following the big picture as to what's going on. I mean, commercial to residential conversions have been going on for some years now, and I think we'll see more of them in the future as we need certainly less retail property on the high street, possibly less office accommodation. And I think the rumours of the death of offices are probably slightly exaggerated. I think we will, most of us, return to offices post-COVID, although a lot of companies are saying a proportion of their staff can work from home for some of the time. So again, I think there'll be some clever models around property development in the commercial sector that will be an opportunity for investment. The other thing that comes into this area is things like bonds and loan notes that pay a regular, predictable income. And it's quite nice to have these things because if you have a passive income portfolio, you can start to think about maybe I need to work a bit less in my business. Maybe I can cut down my hours, or maybe I can use these to cover school fees or university fees. You can start to do what I call financial engineering so that not all the income that you need to cover your commitments has to come from your business. It can start to be coming from your passive income portfolio of properties, bonds, loan notes, and so on. So it's a really important layer, that passive income layer, because those are the sorts of things that you can start making real decisions on your day-to-day life from.
Do we exclude a lot of people in that layer? There's going to be a lot of people that will be listening to this who would love to do that. And of course, when you hear the word passive income, people are thinking of other things like online training, and they're looking at those kinds of forms of passive income, which really probably don't really exist for many people. But do we exclude a lot of people because a lot of people, as we said earlier, they work for somebody else and they don't have the available funds to be able to do that financial engineering?
Yeah, and to be fair, part of this, and I do talk about the fact we try and do a lot of financial education. Part of this is knowing where you need to get to at the point in your life where you can afford to get there. Most of the people we deal with, they tend to be what are classed as sophisticated or high net worth investors. So even that definition, people think high net worth, you must be a billionaire. Well, technically, it's an income of 100,000 a year, or it's investable assets of $250,000, which could just be the equity in your buy-to-let portfolio. Yeah. So a lot more people are technically high net worth than might realise it. But yes, you have to accumulate some money from your business, and then you start to look at how you invest that, possibly as a deposit on a property that's going to give you some positive cash flow. These are all kind of, the process is I make money in my business, I extract it from the business, and then I invest it in assets at various layers of the pyramid. And I think it's important you try and build the pyramid from the bottom up. I often see people who want to come in at the top and the sort of frothier investments without having anything below that. And that's obviously a high risk strategy. You've really got to start accumulating assets. And we talked about gold in the first layer of the pyramid. Well, you can buy that online for a few £100. You can buy gold coins and things that are a gold bullion investment for very little money. So you can get started quite a low level, but as you start to get to the higher levels, yes, you do need a bit more capital.
So we've looked at the bedrock, we've looked at the passive layer. What's the next layer that we're going to be looking at then?
Yep, the next layer, if we can bring up the third slide, is what I call the global layer, or the global diversification layer. Now this is very much, as we go further up the pyramid now, we're getting to slightly more sophisticated levels of investment. And one of the things that I've been saying for a few years now is that we need to get a bit less parochial in our thinking. Most Brits are heavily invested in the British stock market, the British property market. We have to start looking at the world as our kind of chessboard. And this is where I think you don't have to be a billionaire to learn from the billionaires. What do they do? You'll see them making investments in more than one country. You'll see them running businesses in more than one country. You'll see them having residency in more than one country. So my own strategy here, when it looked at, even as recently as late last year, there was a serious prospect of a Jeremy Corbyn Marxist government. I was quite worried about that. So I went and bought some property in a little place called Montenegro, and I got residency out there. I had set up a business out there, a bank account out there. So I had my plan B ready if he had won the December election. Now, as it happens,
luckily he didn't, or you wouldn't be here.
Correct. But there were quite a few people like me that were doing things like that, So.
But would you? I remember once talking to somebody, and they said to me, if we vote to leave Europe with Brexit, I will leave the country. Well, trust me, he is still here and he's still the MD of a company. So it was all talk, all hot air.
I don't agree with you, Steve. The point is not would I, the point is could I? And I had the choice. And what is wealth if it's not about choices? And to me, one of the choices I want is to have somewhere else to go. It's the old Stevie Wonder song. If you had my kind of cash, you'd have more than one place to go. And I think that's really important and significant, because who knows what's going to happen in this country. We've seen the most incredible government decisions in the last few months as to how they want to rule by diktat with barely a reference to an elected parliament. So it's possible that good old Britain might become a very different place in a few years' time, and I want to have somewhere else to go if that happens.
Listen, a couple of questions for you, or at least one question. Linda, once again, most people understand investment in shares, but can Graham please expand on bonds, she asks. And also, billionaires also have access to great advice with regard to protecting their tax position, where the ordinary Joe public, they don't. So two questions there. Let's kick off first of all with the bonds. For those people that don't really understand what you're talking about, what do you mean by that?
Okay, there's two main kinds of bonds. One is government bonds, the sort that are issued by the Treasury, sometimes called gilts. Effectively, it's an IOU from the government. And if you see the level of debt the government's in, you might wonder whether you want to hold IOUs from them. But they're regarded as safe, particularly in countries like Britain or America, where you've got your own currency. You can go on printing until
the cows come home.
Exactly. At some point, you kind of think something's going to happen, but
it's
we'll
going to be worthless, but you can keep printing it.
Yeah, exactly. I do keep on my desk a 50 trillion Zimbabwe dollar note, just to remind me what inflation looks like. So yeah, you've got government bonds and you've got corporate bonds issued by companies. So in both cases, you're making a loan either to the government or the company in return for what are increasingly very modest payments of interest that are in some cases negative now. Something like $15 trillion worth of government bonds now offer a negative rate of return, a guaranteed loss. The Austrian government recently issued a 100-year bond, and I think it was paying about 0.8%. So would you give your money to a government for a century for 0.8% a year? Amazingly, some people will. Mainly, I have to say, financial institutions. Very few retail investors are getting into these corporate government bonds at the moment. So broadly, I would say, buyer beware when it comes to government bonds, and a huge buyer beware with corporate bonds. A lot of them are kind of junk status, so they're probably not the first port of call for an investor that's trying to build some long-term wealth today.
Should we have a look at the very top tier on our pyramid?
Please,
I think that'd be really good to do. So the top tier on the pyramid is high velocity layer. What do you mean by that?
This is really the kind of frothier stuff. So if you want to speculate on the foreign exchange markets about the pound versus the dollar, or you want to take part in an ICO, an initial coin offering of some new crypto, maybe on the property front, that would be something like if you're flipping properties while they're off plan, if you're going for a planning uplift on a development so you don't know what the outcome is. Broadly higher risk, higher return things, which are absolutely fine at that frothier end of your portfolio, but very much on an 80-20 principle. You've got to have all those other layers underneath before you start risking money on those kind of speculations. So very much for the higher net worth investor who's comfortable with what they have in the rest of their wealth pyramid, by all means, go into those things, but know that it's a punt. Know that you're taking a gamble to get a potentially high return, but you could lose all the money.
All right, take a break there for just a few seconds' time. You're watching Business Connections Live. My guest is Graham Rowen. And one of the areas you were talking about was property investment, and also, I don't know whether this is the right way of leading into this, but also the purchasing of other organisations and other companies and investing in that particular way. Jonathan Jay with us in just a moment. He's going to give the key takeaways from his programme. It's more of a pitch as opposed to the key takeaways, but for what he does, he buys companies, he doesn't risk his own money, and he purchases other companies to increase his portfolio. Is that something you would recommend?
Absolutely, and it's something I've personally done as well. I think it's one of the hardest things to do is to start a new business from scratch. A far easier way of growing is to buy an existing business, especially if it's one that somehow fits into your existing portfolio of businesses. Because I know Jonathan's in the nursery space, and he's finding some real bargains at the moment, because obviously that sector's had a really tough time. So it can be a great way of building up your business, perhaps doubling it in one day through one transaction,
Yes.
as I know he's done before. So, but again, the point there is you're growing your business so that it will throw off more money to take across into your wealth pyramid and start building your investment portfolio.
And I think we've got to be clear as well that the process that he is talking about is not going to the bank and putting a house on the line and mortgaging yourself to the elbows or the eyeballs. What he's doing is he is de-risking that as best as he can. And in fact, the business is nearly buying itself, isn't it?
Yeah, so you really put as little upfront consideration as possible, maximum deferred consideration. So, let's say you are a business owner who wants to retire, you need $50,000 a year to live on. I want to pay $500,000 for your business, but I'm only going to give you 50 up front, and then I'll give you 50,000 a year for the next 9 years.
Yeah.
So you've got a ready-made pension, the business is paying that 50,000, and I've got a new business to add to my existing portfolio. It's a win-win.
With those key takeaways from that particular program, if you get a chance, the Jonathan J programs are really insightful. They give a lot of great information, particularly if it's something you've been thinking about doing. How do you grow your business? Overnight, you can double the size of your business, double your revenue, double the value that you've got there, and you're not risking your house, your family, your money, your livelihood. You're not risking that. You are taking risks, don't get me wrong, but this is a structured way of doing an alternative way of purchasing another business. But the key takeaways, here's Jonathan J.
I'm Jonathan J from the Dealmakers Academy, and for the last 20 years I've bought and sold businesses. And what I do now is help business owners acquire other businesses without risking their own money. And that's really, really important, because people think that their ability to buy a business is based upon their ability to access capital either from their own bank account or borrow money from the bank and secure it against their house. I never let anyone do that. What we're going to do is we're going to buy a business, maybe your competitor, a complementary business, a similar business, the same business as yours in a different part of the country or even a different country. And we're going to do it without risking your own capital. We're going to de-risk the transaction so that you never overpay for it. And we're going to take your business from where it is now to where you want it to be, not in the next 5-10 years that your business plan might say, but in the next 12 to 24 months.
There's a little bit of me when I listen to that, and I listen to what Jonathan is saying, that it sounds too good to be true. Is it too good to be true?
In terms of growing your business by acquisition?
And growing your business like that and reducing the risk. Because that's what Jonathan is about. And he is doing it very successfully. And I have met other people that Jonathan has trained and has shown the process that they need to go through. And they too have been very successful. And when you talk to them, you think, crikey, these guys they've just got it all completely sorted. But is it too good to be true? Is that right for everybody, or does it take a kind of person?
Well, I think that question is true of business as a whole. If you are confident in business, and as Jonathan has, if you have a strong operational team around you, then adding another business of a similar type to it gives you immediate savings, because you only need one marketing department, one accounts department, one managing director, whatever. And so you're just bringing in more revenue, more customers, perhaps in his case, another site, another nursery. So depending on the nature of your business, if you can add businesses to it, then that's a win-win. And yes, it's not too good to be true. What I tend to focus on is what I call location-independent businesses, because I like to travel around a lot. Unfortunately, not this year. I like businesses I can run from anywhere in the world. So I've acquired businesses that are essentially online businesses that I can run from anywhere, and then I concentrate all my meetings or my live events into a period of time in one place, and the rest of the time I'm free to run them from whatever country I happen to be in. So depending on your own, you design your own life as an entrepreneur, just as you design your own wealth pyramid and investment portfolio. So part of it is, what's the lifestyle I want? How do I support that from my business? How do I support that from my investment portfolio?
Now, earlier on, you alluded to the tax issues that some people have, and one of the big problems, of course, is tax. We work very hard. The more you earn, the more tax you pay. You felt you were actually paying for the local hospitals in your area, but nobody stood at their front door giving you a round of applause, did they?
No, sadly not.
Well, there you go.
Thank you.
Congratulations. But when it comes to tax, then that is a big consideration, a big worry, isn't it?
It's huge, and I don't know who was that said it, but it ain't what you make that matters, it's what you keep. But what people don't realise, especially business owners, is that there are some amazing vehicles for you, and the one I really want to focus on today is what I call the director's pension. The technical name is the SAS, the Small Self-Administered Scheme. It's the most flexible pension plan in the country. What it means is you can take profits from your business, you can move them across to your pension. Technically, there's a limit of 40,000 each for contributions to a pension, but with a SAS, you can move what might be excess profits above and beyond that as what they call unallocated funds. You can invest them in a very wide range, a much more flexible choice than you have in things like a SIP. But also, you can loan money back.
Just remind us, SIP? What's SIP
that's
again?
a self-invested personal pension. It's the most common kind of personal pension.
Just making certain I've got all the right things.
Okay. Sorry for all the jargon. The financial world is full of it, as you know. But yeah, assuming you have a SAS, a director's pension, you can lend money back to the business. So let's say if I was Jonathan J and I had a SAS and I needed to put a deposit on another business, I could make a loan from my pension back to the operational business at very commercial rates, and enable me to make the acquisition, and then the acquisition throws off more profit, so I can put more money back into my pension. So it becomes, I call it a financial Ferrari. Now the interesting thing is there are something like 5 million limited companies in the UK, and last year only 4,000 of these pensions were registered by HMRC. So they are literally, 1 in 1,000 businesses seems to be using this. So for example, my own SAS owns the office building that we operate from. So the company's paying rent into my pension directly. But also a lot of the other investments that we have can be invested in through a SAS that can't be invested in through a SIP, because a SIP has to do regulated investments like stocks and shares, whereas you can have unregulated investments within a SAS. So you can arrange your tax affairs. Even the Commoner Garden ISA is a brilliant product. 20,000 a year tax-free savings for all of us. I interviewed Lord Lee of Trafford recently. He's a multi-millionaire just from his ISA, and it's all tax-free. Mm-hmm. So, yes, tax is a problem if you're not on top of it, but even within the constraints of our system here, there are some brilliant tax breaks out there if you look for them.
Which is really encouraging, isn't it? Interesting, going back to purchasing businesses, great way to pass down a family business to the next generation, says Mark Terrell. Thank you, Mark. Great to know that you're watching the programme, and we should have you back on again in the future. But he's right, isn't it? It's clever investment, keeping the money within the family, isn't it?
Well, there's two separate things there. Let me just be quite clear. Yes, I think passing money on through the generations is important, and pensions is one way you can do that now, which it didn't used to be. But I'm very nervous about passing a business on through the generations. 70% of businesses, family businesses, fail at the second generation, 90% fail at the third generation. So one of the things that I cover in the sort of financial fortress area is how you prepare the next generation for what they're going to inherit, whether that's a business or an investment portfolio, because oftentimes they don't have the same business acumen as the person who built the business up, and possibly not the same investment acumen. So you've got to be very careful about what you expect of the next generation, how you educate them, how you bring them into their inheritance, because certainly the statistics, sadly, are not that good for family businesses passed down the line.
When it comes to finding the appropriate information, then where do we go? Who do we talk to? Is it people like you, or is it do we look for a financial advisor, an independent financial advisor? Who do we talk to find this out? Because it seems to be a broad breadth of the quality of the people that you can talk to, and also the way they think. There are some people that think money, pensions, investment. There are other people that are a little bit more adventurous. They think outside of the box. How do you find the ones that think outside the box, but you don't risk your money as much as you will worry about?
Okay, yeah. No, I
That's
think
a funny old question. It was a bit muddled, but you know where I'm coming from.
Exactly. And I think the point is you have to be the orchestra conductor. And you have to build a team of people you trust, a source of information you trust. There are some great online sources of information that I use. So I probably have 7 or 8 sources of information from people, from sites and platforms, but ultimately I form my own view. I take my own decisions based on distilling that information. So yeah, by all means have a financial advisor or a wealth manager, but recognize their limitations. There are only certain things they can talk to you about, and they don't have access to the full market. So
don't you find that business owners are busy being business owners, and they don't have the time to keep their finger on the pulse when it comes to their financial matters?
That is true. Obviously, I try to encourage them to put a bit more time into that.
But you're doing it all the time. It's what you do. But
Yeah.
somebody that's running, XYZ building company or production company or whatever, they're very busy doing that, and they're hoping that the financial matters are actually happening somewhere else, and they're doing it for them. I can see what you're saying. We should be aware all the time about everything. But that's just not human nature, is it?
No, but equally, look back to my own story. I would not have lost 160,000 if I'd been a bit closer to those guys. So yeah, I've been there and done that strategy. It didn't work terribly well for me, Steve.
All right then. Tell us a little bit about your society, about what they do and how they help people. So tell me what they're about.
Yeah. The Beaufort Society is a sort of private members club for sophisticated and high net worth investors. So those definitions are the FCAs. So it just means they're allowed to see unregulated investments, so more than you can get from the high street financial advisor. So what we do is we provide loads of content in the form of webinars, in the form of physical newsletters. I do videos every day on YouTube, and hopefully live events sometime soon. And we do loads of educational material. We help them to get that big picture view and then to structure their investments in the way that I've described as the wealth pyramid. We introduce them to experts where relevant for things like the director's pension or tax planning. And we have a kind of very carefully curated portfolio of investments that meet certain needs at each level of that wealth pyramid. So we do a lot of the work for them, but ultimately they've got to do their own due diligence and make their own investment decisions.
When they approach you, what's the most common thing that you say to them? What's the most common misconception that they may well have?
I think they don't realise some of the investment opportunities that are out there because we're not allowed to advertise. We can't put them on our website, for example. So there are very tight rules and regulations around the kind of investments we offer. So you kind of have to get behind the curtain. You have to kind of qualify as sophisticated or high net worth, and then we can show the range of investments that's available to you. But we're not allowed to show them to what the FCA call retail investors. So you do have to qualify, and that's all clear on the website at beaufortsociety.club. You just have a look there. You can self-certify and then gain access to everything we do from that.
And what's the big success stories out of that then? What kind of results can they get?
Well, at the moment, we're helping people to invest in a new clean energy company, for example, that's on a very high upward growth curve, where we think they could become what they call a unicorn, with a £1 billion valuation in the next few years. We have a loan note based around litigation that's paying sort of 10% a year, paid quarterly. And we have access to gold bullion at significant discounts. So, things that are useful things to have in your portfolio, and we describe all the due diligence we've done. Have a look at them and see whether they work for you.
Nicola has just contacted us. Hi from Montenegro. What are the key aspects to be improved so people who are filling the global layer from wealth pyramids are more likely to invest in the location where he is, in Montenegro, businesses or real estate? So what are the aspects to be improved so that people will do that, do you think?
A lot of it is just information and education. I've become a kind of unpaid ambassador for Montenegro in the last 12, 18 months because they have a lovely tax system. I call it the emergency system. It's 9% income tax, 9% capital gains and 9% corporation. So 999 is their tax rate. Very nice. You just need to buy property there to have a residency. If you start a company there, you can get a work permit. So it's a very business business-friendly, very foreigner-friendly climate. So they're actually trying to get into the EU. If you're a Remainer and you want to get back into the EU, they're going to do that over the next 4 or 5 years.
Mark's been back on again. Just to clarify, rather than raising fund to buy out the retiring part, the next generation can pay over a number of years. Okay, so good clarification there. So Mark's going back to his question earlier on about passing a family business to the next generation. He's saying rather than raising funds to buy them out and then the retiring part, the next generation can pay over a number of years. So that clarifies what he was saying there, and that kind of sort of agrees with what you were saying, doesn't it?
Well, if the next generation want the business and can run the business, then paying for it in a deferred way certainly would make a lot of sense. But the first question is, do they want it? And the second thing is can they actually do it? Because there's a lot of baby boomer owned businesses for sale at the moment because the next generation has seen how hard you work to build it and they don't want to know. They want to go and do something else.
Indeed. Listen, that is nearly the hour. How quick has that gone by?
Amazing.
That's been absolutely amazing. Listen, I hope you've enjoyed today's programme. Just before we finish the show, we always ask our guests to give the key takeaways. Now, while this is sometimes perceived as a pitch, what it really is a summary of the programme. So straight down camera, number 4 is your camera. Please do say who you are and where you're from and the key takeaways. So they watched nothing else. They would get a flavour and an understanding about what we've talked about in the last 60 minutes. Graham, the airwaves are all yours.
My name's Graham Rowen. I'm chairman of the Beaufort Society. We're a private members club for sophisticated and high net worth investors. The key things I really want you to take away from this, based on my own experience, are first, you have to take personal ownership of your financial future. Nobody out there puts you at the top of their agenda, including financial advisors, wealth managers, etc. The second thing you have to do is to use your business as a giant ATM machine to take cash out of that operational business and put it into investments at some level of the wealth pyramid. What do I mean by the wealth pyramid? That's a kind of a multi-layered structure where each of the assets in there does a different job for you, so that you have some that are protecting the purchasing power of your money, some that are giving you income, some that are giving you some diversification into other countries. And the next thing you have to do is wrap a protective financial fortress around that, which includes having the right kind of tax planning. I've talked about having a director's pension, a small self-administered scheme, as being a financial Ferrari and a little known secret in the investment world. So by all means, bring in other advisors, but you've got to be the orchestra leader. You've got to take money out the business, build your asset portfolio, and then that will give you long-term wealth today and on into your children's generation and their children's generation.
Absolutely brilliant. Thank you very much indeed. That's a great summary for the program. If they want to get in contact with you and they want to find out more, all the information to contact Graham is on the website at businessconnectionslive.com. You'll find all the links there. But just to remind you, Graham, you can remind us right now. If I want to get in touch with you, how do I go about doing it?
Well, the website itself is beaufortsociety.club, and my email is just graham@beaufortsociety.club.
Now, you're running a series of webinars. I know you've got a webinar coming up very shortly. What kind of, and once again, the link for that is on the page that you're watching this program on. If you're watching on social media, it will be on this particular post right after the program. But for people that want to go on that webinar, A, how much did it cost? B, what are they going to learn?
Okay, well, the cost is a round number. It's free. But what they're going to learn is why I believe we're entering a period that I'm calling the age of uncertainty. We've gone through a 40-year bull market. I know there's been ups and downs even within that, but broadly we've had a 40-year roll, and there's all sorts of reasons why I think that's about to change and why you need to be on the right side of history, and I cover all of those points in that webinar. So it's about 45-50 minutes. I hope you'll find it really helpful in terms of preparing for the background of some of the stuff we've talked about on the program.
What's lovely, James Mendel Brown's just said, thank you, Graham Rowen. You know James, obviously, then. Do you know James Mendel? You do know James. And he says, say hello to Audrey.
Ah, right. Okay.
Secret messages going through now. Listen, it's been absolutely fantastic today. I've really enjoyed it. Do you think there's anything else? Is there one last piece of advice you want to give people who are watching this for the first time, undecided about the way they're going to move forward in the future, but really are thinking to themselves that this is something that would interest them?
Yeah, I think really it's a case of, look, start educating yourself. That costs very little, just to start looking at some of the information online, start reading a few books, just make a decision that you want to educate yourself about investing. No matter where you start, I mean, a good start, a lot of people look at things like Rich Dad, Poor Dad by Robert Kiyosaki is a great way into understanding money and cash flows. But, you know, really the point is you have to own your financial future for your family, for your children, for the next generation. And, you know, if you don't take ownership of it, nobody else is going to, as I found to my cost. So, you know, don't do what I did. You know, take ownership and get it right the first time.
This has been an absolute pleasure talking to you today. Hope you've enjoyed today's program. That wraps up another edition of Business Connections Live. We do hope you've enjoyed the program. We're going to be doing it all again next Monday with another new guest here on the show. Until we do it all again, thank you very much indeed for watching. From me, Steve Harland, thank you for being with us today. Keep those questions coming in. We will answer them on social media. But until we do it all again from all the team here at Business Connections Live, thank you for watching, and we'll see you soon. Bye for now. Bye-bye.
Business Connections Live, the UK's leading online business channel.